The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good. This is Billy Ray Valentine from the offices of Duke & Duke, 600 South Broad Street, Philadelphia, Pennsylvania. Folks, you have to watch the news today because a F-16 fighter jet, which is the old F-18 Navy jets that they've sold, they've been around forever, shot down a Russian plane that invaded the airspace. There'll be a lot of propaganda, but I have to tell you one of the funniest stories of Arizona, and it's you can probably go in and still find information on it. But about 15 years ago, in Arizona, we live right. My house is exactly 72 miles from the Mexican border, and Davis Monthan Air Force Base is about 15 miles south of me. It's a huge complex. It's immense. One of the largest Air Force bases in the world. We have the stealth bomber come here to be refueled and stuff, and so it's really a really big place. Anyway, what they do is they have a contract with the DEA and also the Border Patrol to take care of planes that fly in from Mexico bringing in drugs. Well, about 15 years ago, it takes them 2 minutes from the time they get the call from the border for the plane to be in the air and functional. And when you're only a few less than 60 miles, well, at that point you're only about 40 miles from the border. They're right there, so they can tell when these planes are coming in before they reach the Mexican border. So they said that there's a plane coming in. So the pilot goes up, and it was a Piper Cub with two guys in it, and he signals them to come down, and they open the window, and they pull out a shotgun and fire it at the F-16. So the F-16 calls back to the base, and he says to the commander, or whoever it was, he says, "I'm being fired upon." And the guy says, "Are you kidding me?" He didn't say it quite that way, but he said, "Try to get the plane to come down without shooting it, because you're only within 30 miles of people, population." And so what he did was he backed up a little bit, went above the Piper Cub, and then came down really fast to shake the Piper Cub to get it to tell him, he was in a really bad place. Anyway, it shook the plane so bad, one of the wings fell off, and they were about 1,000 feet at that point, and they circled down, and the plane crashed, and nobody was killed, but a couple of the two guys that were in the plane, the drug smugglers, were injured. Believe it or not, they sued the U.S. Air Force and the DEA and the Border Patrol for excess force. And they sued the rancher, and they won. They won a judgment. This thing was so, oh my God, everybody in Tucson was, well, not Tucson, everybody in Arizona was, upset about it. What happened was it went to court, and they overturned it, whatever. But the boys did go to jail. But anyway, that's neither here nor there. But anyway, that's what you have to be careful of if you have if you're flying an F-16, which you're not going to be unless you're in the service. But this is the kind of stuff that goes on in the world that we're all aware of. But we'll have to wait and see what happens. Okay, we've had a pretty good rally here in gold, $14, which isn't really very much. Folks, we're getting really close to a redrive to a bottom pattern in the gold at the 1050 level. If we get down there, we got to take a shot at it for two reasons. One, there's a beautiful3 drive to a bottom pattern there. The second reason is platinum's doing the same thing. The platinum number comes in at around 805. We're about $30 above that. So we need $35 above that. So we'd like to see both of them come in together. We also have a potential, of course, copper to spike down one more time below the $2 a pound level. So we're getting close. So we're going to see if this is going to happen here very closely. Now, all we did in gold today was rally to the 61% retracement up at that 1080 level, which was the level from the previous day's high up around from the 20th, excuse me. So that's one of the things that we're watching. Now, there's been a lot of talk here about the crude oil because of the fact that crude oil has had such a big move. Wow, $1.50 a barrel off the bottom. Actually, it's $2 a barrel off the bottom, and so it's got its first test up here at the $43 per barrel level. Here again, there's a potential for this thing to bottom, but right now it has not done that. So we want to watch it very, very closely. As far as the stocks are concerned, we mentioned yesterday so far that 61% retracement in the New York Stock Exchange Index is held, and that is so far that is still in the cards. So we'll have to let the market tell us if it's going to get above that November 2nd high at 21. Was it 21 and change in the S&P? But if it doesn't do that, then we will we'll probably be heading back down lower. Well, could be my guess. The German stock market is already turned down, breaking out some pretty serious lows down there at the 109 or 10,900 level in the German DAX. They announced today that the German pensioners are going to be taxed 3%. These are people that are already retired. Now they're going to tax them another 3% to help pay for the refugees that are coming in. And I believe this refugee problem, not only is it an economic problem, it's a problem of demographics, because you have all these people coming in, and there's a high percentage, I think 70% of the population coming in on these refugees are young men. And so that's that shouldn't be, if these refugees are coming, it should be really close to 50-50, folks, or something is certainly wrong. And like they're saying that Europe is being invaded, and it's doing it supposedly legally, but that's what we're watching here. So keep in mind that this stuff can really be problematic down the road here. If down the road here, someone makes a comment in a room that the women are much smarter, and there's no question about that. I have two daughters that reminds me of that all the time. So we want to watch that, very, very carefully in the news to see what happens, because I don't know if that had anything to do with what happened in France. They say that it did, but who knows? You never know what the government's really telling us. So we'll wait and see. So keep an eye on this crude oil right now, folks. We're at a real critical level over the last few days, up at this 43 level to 43.20. If we get it above 43.50 in the crude oil, we're trading at 43 right now, then we've got a chance for a much bigger rally. So we'll wait and see. Someone's asked a question: if have I ever gotten any inside information that turned out to be good? No, I never really have. I mean, I worked at Drexel from 76 through 82, and all kinds of tips would come through. Never one of them ever turned out to be correct. I mean, not one, zero. The only tip that I ever got was going to work one morning in California there we're out in Pismo Beach. I had to stop and get gas. It was about 4:30 in the morning, and I pulled into this same gas station that I used for years, and the guy was driving the same kind of car I was, and I noticed in the back seat was a full bird colonel, a uniform. And I looked and I saw it. The guy was a Navy SEAL. And so I went up to him and I said, "Hey," I said, "where are you going?" And he said, "Well," he said, "I can't really talk." And he asked what I did that early in the morning. And I told him, I traded commodities. He says, "Well, don't be short crude oil." This was January of '91. And that was right before we invaded in Desert Storm, when oil dropped $11 in one day. That was the only time I got information, and it was wrong. But I was trading a pattern, so it didn't really make a whole lot of difference. I hope some of you folks had a chance to look at that article that I posted yesterday from the University of Israel about the technical analysis versus fundamental analysis. It basically says the same thing that Dr. Andrew Lowe's work did, that the technical analysis can be very, very helpful in determining what you're looking at, because what you're doing is you're watching price patterns unfold as people buy or sell something. It goes back to the old market adage, they can lie to you, they can cheat you, they can give you misinformation, but they can't hide from you. If prices are going higher, there are more buyers. If prices are going lower, there's more sellers. So keep that in mind. I want to show you something like that because we've heard a lot about this in the news, and it's getting more and more prevalent as we see this stock break down. This is the stock of Deutsche Bank. It's the largest bank in Europe, of course, the flagship bank of Germany, and this stock is breaking out in a new low ground. And as you can see, if we get it another $3 lower, below 22, it's going to be it's going to look really, really bad, because it's going to be expanding beyond the 1.618 level. So look at Deutsche Bank, another 10% lower, because if we get below $22 a share, folks, that chart's going to look just like the Lehman Brothers chart did at 18, and it went from 18 to 0 pretty quick. So you want to be watching that very, very closely. Now, there's a lot of news about the Saudi Arabia and how they're, jawboning the price of oil and stuff like that. So that's pretty much what we're watching. Someone's asked me to post the chart of the oil. Unfortunately, the chart that I'm looking at, I'm unable to post because of the technical difficulties I have of dragging charts over into the room. What I'll try to do during the break is to send it to myself and then post it that way to give you an idea of what I'm looking at here at the $43 level in the crude oil. Now, back to someone's asked a question about the stock market here. The S&P last night we got down to 2065. Had a pretty good rally of about 14 points, and then we backed off to the 786. If we get below that 2065, that's going to turn the shorter term trend down, because we did stop at the 786 on the S&P, the NASDAQ, and the Dow Jones, but the New York Stock Exchange Index only got to the 61% retracement. So watch that. We have to be really aware of a couple things, I think, that are important. One is the fact that the euro could be making a bottom in here. We came very, very close to that ABCD pattern that we've been watching for quite some time in the euro. I'll post that in here to let you folks look at it. And we missed it by about 30 pips. And the euro has a tendency to be really accurate. So I'm still looking for the possibility of the euro to get down to that 105.60 level. We're about 100 pips from that right now. So that's a possibility that maybe we missed it, but I don't think so. The euro is really, really good with hitting these numbers spot on. So I'd have to wait a little bit. We'll take a little break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Plus. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. This is Larry Pesavento for TFNN. We're going to take a look here. We've got a question about the yen dollar. As you can see, we've talked about this over the last week or so because we had that 20-man line that Jim Twentyman has shared with us. That's a trend line that touches major points, and you'll notice the market comes right back to touch it. And when it's really perfect, it hits a perfect 786 retracement, and we hit that exactly in the yen 6 days ago. It took out the previous week's high by 5 pips and has now dropped about 130 pips to the downside. That was also completing a really nice ABCD pattern there at that point. So you had a whole bunch of things to say that this was a spot to take a look at the short side of the dollar yen. We were going to have Rich Anderson of Anderson Capital Management on at the break. He's going to talk to us about this rule by the New York Stock Exchange and the NASDAQ about the canceling of stop orders. He went into more research, did quite a bit, and it's not nearly as bad as I thought. Rich will tell us what it's about, but it's really it's a paper. What do you call it? Well, not a secretarial, but a I can't think of the word. What they're basically doing is, I'll let Rich tell you. He'll get it right, but I asked him to double check everything, and that's pretty much, what we're looking at. We've had a pretty good break in some of these things since yesterday. I mean, not very much. We're down about 25 points in the S&P, but that's only in a couple of days. And since we were coming out of that area of the 786 retracement, that does mean something. Now, I wanted to talk about, I've had a question about the price of Apple, and I wanted to share with you, one of the listeners said, how can you be short Apple when Goldman Sachs is willing to buy it? Well, if you go back and look at stockcharts.com, they posted a chart about Goldman Sachs about when they, be buying and selling this stuff. Folks, remember, Goldman Sachs is in the business of making money. They have a terrific research department, but they can be as wrong as I can and as anybody else. But remember, it's just you have to take the responsibility yourself for whether you want to do these things or not. Remember, this shows you how bad they were in Apple, but if you remember a couple years ago when oil was $140 a barrel, they issued a special report that really had everybody in turmoil that oil was going to $200 a barrel, and it never moved a pip higher. I mean, that was the high day, and it went from 140 down to 33. So, just remember that these folks can be as wrong as rain or as right as rain. So you have to take the responsibility for that. And that's where it helps to do, some pattern recognition. And believe me, pattern recognition is far from perfect. That's the best you can do is about 60–65%. But, that's still a tremendous edge. And the main thing is you want to try to control your risk. That's the key thing. We have a rally going in bonds now. I believe that this is probably it in the bond market. I don't think we're going to get much above this 156 level. We got to 155.24 last night. We sold off about 3/4 of a point from that point. But I believe we're getting really close to seeing another leg down in the bond market. Remember that interest rates have already started to go up. And the Federal Reserve is lagging behind the market, and why, I don't know, because they have every reason in the world, to be able to turn this thing around. Commodity prices are still going lower. We had new lows in platinum last night. Zinc made another new low. Copper didn't quite make a new low, almost did. And gold and silver have had a little bit of a rally. But none of these commodities, you look at the grain markets, they're still under a great deal of pressure. We'll have Rich on at the break, and he'll help us out with that. Remember the price of copper here, if you'll take a look at it on the long-term chart that we posted, making the comparison between the New York Stock Exchange and the S&P 500 and the copper, and you can see the big divergence that we've had since the middle of 2012 when we started to get the effects of quantitative easing coming in. And that skewed this chart, but it used to be copper said what was happening in the economy, and so far it hasn't been doing that. But we need to get copper back above the 208, 210 level to see if it has any chance at all of being bullish, because if it doesn't, we could easily break down to the old low, which was $1.35. It should have some pretty good support at $1.90 in copper, because that's a 1.618 expansion on the long-term daily. We'll have Rich Anderson at the break, folks. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we've got Rich Anderson of Anderson Capital Management on the line. Rich, how are you this morning?
Good morning, Larry. Doing great.
Listen, would you please tell the folks about this New York Stock Exchange and NASDAQ rule about the canceling of stop orders? Because I had it totally screwed up yesterday. Would you set them straight, please?
Well, it's been hard to wrap my arms around what they're doing. Apparently, they've decided that stops cause volatility, and volatility is bad. Therefore, there are no longer stops. Now, your big traders don't care because they have algos, that the computer programs, that if a market trades below a certain price, so automatically the computer puts in orders to sell. It's the rest of these people. That's like saying, I'm going to Vegas and I'm going to give my credit card, and they'll take me to the limit before they stop me from playing. I'm dumbfounded by it.
Yeah. Vegas used to do that. You could put your credit card into a slot machine, They stopped that after 6 months because it was being abused so bad that, you know, it was the people found it strange that they couldn't beat slot machines. Rather novel approach, huh?
But I mean, they're experimenting. In the old days, you could buy stocks or you could buy mutual funds, and you can only buy the mutual fund on the close. Nowadays, you can buy ETFs. And so you can buy it in the morning and sell it in the afternoon, or vice versa. And so that ETF world created a bunch of volatility, and you know, they're trying to tamp it back, but they're tamping it back on the people that can least afford it and are already at somewhat disadvantaged. I'm kind of shocked. You know, we also have a CFTC meeting that's starting right about now, where they're going to be talking about registering prop traders. Now, prior to 2008. Swap traders weren't really registered. And then after 2008, if you had an annualized trade of $8 billion, you got registered. Well, some of these prop traders, you know, they're buying and selling constantly with their computer programs, and they have all kinds of wash sales, and they're self-trading, and there's just a lot of technical things going on in these markets that are helping to create these wild swings, and of course it's reducing liquidity.
Yeah, well, canceling stops orders is not going to be the problem. I mean, that's the only protection that some people have. I know it's abused occasionally during these flash crashes, but my goodness, I hate to think about you know, what will happen if they do cancel that. I mean, that just is very strange. And Rich, I would bet 8-5 against the fact that there was anybody on that committee that was a trader that made that rule. That would be my guess.
They're all compliance people. The compliance world is taking over. It's unbelievable. The whole thing's changing, and we'll have to see how it eventually evens out. I mean, co-location, where they have server hotels where the servers are right next to the exchange servers, so those guys have the nanosecond edge. I mean, you know, and then they have those algo programs to automatically put their orders. A lot of the hedge funds in the meets back when we had the orders in the pit, you know, they would tell their broker, I want to stop for, let's say, 5,000 cattle, but I don't want you to start selling them until it's traded through that price and then trade back up. And then if it goes through it again, that's when we get out. And so, I mean, there's all kinds of things they can do with the computers, but your average person doesn't necessarily have access to that. They don't have the time for that. The whole world, there's become an information explosion, Larry, and there hasn't become an explosion in analysis. And that's what you and the rest of the guys that Tom provides in the morning are doing. I heard a statistic that videos, they're being uploaded right now. By 2019, the number of videos will be uploaded in a month. It would take you 5 million years to listen to watch. I mean, it's you really have to drill down and look at the big pictures, take the oil markets. The Saudis were right, and they are always the swing supplier, and OPEC, they were right in realizing they could no longer be the swing supplier because of the fracking in the United States. They've kind of squashed that for the moment, because reserve lending, if I'm an oil producer, I go to my banker and I've got so many reserves, they're going to lend me money on those reserves. If those reserves are priced at $40, I get a whole lot less than when they were at 100. So that's temporarily taking these frackers out of the business so that the Saudis can be more influential as the swing producer. And you saw yesterday how they're changing their opinion as of December 4th. The other thing is that the coalition is hitting the oil tankers of the ISIS production, and that production will slow things down. But don't underestimate the floating storage we have off the coast of Europe, Singapore, the U.S. I mean, there's tons of old tankers that are no longer real seaworthy because it costs too much money to run. You know, they're not fuel efficient, but they're used as floating storage. So that will be a constant supply above the market. And then the cheating that'll go on once the price gets above X.
Oh, absolutely. The other question that some of our folks have asked us about today in the Tiger Den is the status of the grain markets. Now we've having our last harvest moon now, and the crops are pretty much in, and the wheat, corn, and soybeans are languishing near lows. What do you see? Anything that could possibly turn these markets to the upside in the coming months?
Well, yeah, in the coming months we'll have some weather concerns that'll light the fire. But for the moment, Argentina elected a new president, Macri. He's pro-business. He's likely to somehow float the peso, which is, right now, if you sold soybeans, you get taxed big, and then you lose a bunch of money on the differential between the black market rate and the official rate. So he's likely to float the peso and then reduce the taxes. So the soybean complex has been thinking that there'll be this huge influx of soybeans onto the world market. But it takes time, number one. It'll take him time to do these policies. He doesn't come into office until December 2nd. Notice their market, their Argentine stock market had been going up, and then after the election, the market went down 7%. Well, it's buy the rumor, sell the fact. There's an old saying that the front months are for show and the back months are for go. And so you start to watch the back months of all these markets. We need to get the back month corn, December corn, probably in that 425 area, 430 area to buy acres for next year for the U.S. But so far there's no weather problems in Brazil, in Argentina, in South America.
Yeah. Well, someone asked a question. These stops that they're talking about for the New York Stock Exchange and the NASDAQ, this is not going to affect the commodity markets at all. Is that correct?
That's true. It will not affect the commodity markets. But
and I know foreign exchange markets are certainly, they're not going to change anything, and because they're not regulated like the rest of them are. So I imagine that part will be okay.
I mean, it's going to force people to use. If you want protection, you're going to forced to use options. To buy puts against your long positions. This is see the firms. Their motto is trade small and trade often. Of course, generate more commissions. But that doesn't necessarily work that well in the long term for your average person. Did I just lose you? Hello?
Rich, are you still there?
Yeah, I'm still here. I don't know what happened.
No, it's the Skype went out here in Arizona. I don't know why. We got perfect weather. It's going to be 80 degrees and everything's nice, but the internet goes out, and what are you going to do? I always worry about that during the trading time, because everything's electronic. Before, we used to have to call these orders in. You don't do any calling in anymore, do you?
No, I have that ability, but everything's electronic, so all you're doing is calling a clerk that's keep punching it into electronics. I mean, there are some pits where they still have some brokers executing options, but it's ridiculous to call anything in anymore, other than if the computer's crashed. I might add that the other thing to watch is the dollar. You know, first of all, the lower oil prices has been like a tax cut to the world. The higher dollar is putting negative pressure on the CRB index and the commodities in the U.S., which are at 1999 lows. The Baltic Dry Freight Index made new lows again today. And that shows you the amount of trade that's going on, because in order to get something from Asia to the U.S. or U.S. to Asia or Europe, you know, you have to ship it, and that's the price it's costing you to have to ship stuff. So that's a little disconcerting, but the lower oil prices is more stimulus than almost anything else. Now, the higher dollar is putting pressure on all of our commodities. When the dollar peaks, that's when you'll start to see a lot of these commodities take hold. But take gold as an example. Look at how much the reserves have been increased by China since 2009, how they've been constantly acquiring gold for their reserves. Look at the big deliveries that were taken last year by large money. I mean, there's people that, you know, you got to buy it when nobody, you know, you got to buy your coats in the summertime and buy your straw hats in the wintertime.
And sell them when they're yelling.
Yep, that's about right. But I got to tell you, these people that have an opportunity to listen to you and Tommy and the rest, they're lucky, because there's some thoughtful people that, you know, like yourself, that have dedicated your life to helping others.
Yeah, well, Rich, we rely on you.
No, I'm anonymous. I'm anonymous. I'm anonymous. But the CFTC meeting today, in all seriousness, it'll be interesting what kind of ideas they come up with. These algo traders and high-frequency traders. I mean, you look at cattle going straight down $7, and then straight back up, and then going straight down $10, and then straight back. I mean, part of it's illiquidity, because a lot of the big traders, since there's no floor, they no longer trade.
Yeah.
It's a new world out there, and then we've got all these other crazy and scary things. You know, the slowdown in France and Belgium. I mean, that's going to really drag their economies.
What about the ramifications of all these refugees, the safety and the feeding them, and it's going to be a disaster bringing in 1 million people like that. Well, they don't know how many exactly, but I mean, that's not very, very good in my opinion. I empathize with them, but boy, for the countries that are taking them, it's a really big responsibility, isn't it?
Yeah, it'll change their culture. Those countries over time, over 20 or 30 years, and it happens very quickly. The foreign policy errors that were made by this current administration in failing to deal with Syria back in 2011, 2012 onward are costing more lives and more disruption to the world than anything that was done in the previous administrations. It's a pretty sad state of affairs. But they don't, the current administration says, well, they share our values. Well, they don't. They don't share our values of freedom of speech, freedom of religion, and women's rights. And 30%, at least 30% of the people that are immigrating, when polled, are very supportive of the current jihad. And these guys are end-of-the-world nihilists. That's their goal. That's apocalyptic nihilists. That's what they are. And at least 30% of these immigrants believe in it. They believe that the January attacks were legitimate because they were attacking, Charlie Hebdo, and those guys were attacking Mohammed.
Hey, Rich, we've got a commercial, buddy. Thanks for joining us, pal, and we'll talk to you in a few weeks, okay? Happy holidays to you and the family.
Happy holidays and happy Thanksgiving. Be grateful.
You bet. Bye-bye.
Thanks.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, Trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we have keep our eye on the ball here on the gold because we're still looking at this 1050 level for a potential really good bottom. Remember, when we've had these patterns before in the gold where we've made these spike bottoms, they've rallied somewhere between $70 and $120 per ounce, which is a considerable amount. We're still in the bear market, no question about that, but we are getting extremely oversold and we're getting ready to turn. I mean, look at the platinum chart that we've looked at several times here over the past few weeks. I mean, it still keeps going into new low ground all the time, and I don't think that we would have to see how much more it could go to get down to that the 805 level in the platinum. We want to watch gold at the 1050. The stock market, as long as we don't take out those highs of November 2nd, which was the 786 retracement, it was the perfect 61% retracement in the New York Stock Exchange Index. We retested that New York Stock Exchange 61% retracement of the November 2nd high on Friday. We're down 2 days. We're coming into tomorrow, which is the day before the holiday. It is the single most bullish day of the year. Also followed on Friday is also, which will be a partial day of trading. Those days are very, very positive bias, but just a bias. That doesn't mean it can't be down. I think it was last year the market was down into the holidays because holiday sales were supposed to be bad, and then right after that the market exploded out of there the day following, the Monday following the Thanksgiving weekend, which was a beautiful retracement level, as I recall, in the stock market, and then we went up and made new highs after that. So we'll keep it day by day. But remember, these statistics that they give you, these are just biases. That's really all that's going on. So watch it very, very closely. If we close below the lows that we made on the 13th, which would be at 1998 in the S&P futures, which is a considerable 80 points away. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade.